Are you wondering how Canada's real estate market is rebounding as we approach 2026? Is there a shift in buyer preferences that could shape the future of multifamily properties? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In recent news, BNN Bloomberg highlighted a significant development in Canada's housing market. The Canadian Real Estate Association reported a rise in home sales in October, driven by lower borrowing costs and 3 years of pent-up demand. This is an encouraging sign for investors and homeowners alike, as it indicates a recovery in national housing activity as we near the end of 2025. The report also notes that while there's been an increase in activity, pricing trends remain uneven, particularly in major cities like Toronto and Vancouver. These cities have seen price softness, especially in small investor-focused condominiums. This trend is largely influenced by shifting buyer preferences, with many prioritizing flexibility and transportation options over smaller condos without parking. This is an intriguing development, especially for multifamily real estate investors. As millennials, now in their 30s and 40s, continue to drive demand, they face affordability barriers and are increasingly prioritizing homes that offer more space and amenities like parking. This shift could signal a growing opportunity for multifamily developments that cater to these evolving needs. Urban living pressures and the prevalence of smaller homes are also contributing to delayed family formation in major cities. As people delay making big life decisions due to affordability and space constraints, there's a potential for multifamily developments to fill this gap by providing larger, more accommodating living spaces. The discussion around the difficulty of selling small condos without parking highlights a critical point for developers and investors. As the market evolves, there's a clear need to adapt to these changing demands. Condos and multifamily properties that offer parking and cater to the lifestyle needs of today's buyers are likely to see increased interest. While the current market presents challenges, there's always a silver lining. The demand for multifamily properties that offer the right mix of space, amenities, and location remains strong. As we look toward 2026, the focus on adaptability and understanding buyer preferences will be key to navigating and thriving in this dynamic real estate landscape. In other news, HPI Real Estate Services and Investments has broken ground on a major multifamily development in Northwest Fort Worth, Texas. This marks HPI's first venture into Fort Worth, a city known for its rapid growth. This ambitious project, located at the southeast corner of Bonds Ranch Road and Blue Mound Road, will deliver 829 luxury apartments, townhomes, and detached cottages across a sprawling 55-acre site. The development is strategically positioned in one of America's fastest-growing cities, and it's set to cater to the rising demand for new apartments in the Dallas-Fort Worth region. Interestingly, while demand remains near historic highs, new multifamily construction starts have seen a significant decline since 2022. This project is a testament to HPI's commitment to addressing the housing needs in this booming area. The first phase of the project is already underway, with construction beginning on 396 1, 2, and 3-bedroom apartments. These units are expected to be ready for residents by early 2027. Zoning and site plan approvals have also been secured for an additional 240 apartments and 193 build-to-rent townhomes and cottages, with design and permitting processes currently in progress. Tim Shaughnessy, HPI partner and multifamily president, highlighted the challenges they faced in securing entitlements due to the size and complexity of the planned development. Despite these hurdles, HPI is making a significant investment in this project, confident in the need for housing in what they describe as a trophy location. HPI is investing $16 million of its own capital, alongside a consortium of private investors, including high-net-worth individuals and family offices. While the total investment amount remains undisclosed, the development's proximity to top destinations like Alliance Town Center and nearby retail centers underscores its potential appeal to future residents. This development comes at a crucial time, as the Dallas-Fort Worth area's population growth continues to outpace new apartment supply. Despite a record number of multifamily housing starts in 2022, construction starts have dropped significantly due to high interest rates and construction costs. This has led to a projected 47% decrease in new apartments between 2024 and 2026, according to data compiled by JLL. In the first half of 2025 alone, renters in the Dallas-Fort Worth area leased approximately 8,000 more apartments than developers added to the market. This underscores the pressing need for new developments like HPI's to keep up with the burgeoning demand for housing in the region. The development team responsible for this project includes a variety of experts like Blackland Partners as the general contractor, Archon Corporation as the architect, and Greystar as the property manager, among others. This collaboration highlights the level of expertise and commitment involved in bringing this multifaceted project to fruition. As HPI continues to expand its footprint in Texas, this project represents a significant milestone in its 30-plus years of developing, managing, and investing in real estate across the United States. With offices now in every major Texas city, HPI is poised to make a lasting impact on the multifamily housing sector. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.